Right, there's bad news in the UK about inflation because it's up to levels unseen since 1992, coming in at an annual rate of 7.1% in May. That's also up from 6.8% in April. But the numbers that matter the most to households are even worse. Consumer prices were up by 8.7% in May and have held at that rate for months. The UK has been Europe's worst when it comes to battling back post-pandemic inflation pressures. And last summer, chaotic decisions during the short tenure of Prime Minister Liz Truss promising spending without taxation caused a brief financial crisis. But the Bank of England's interest rates haven't yet brought inflation down. For more on this now, let's go to Naeem Aslam, who is CIO at Zay Capital Markets in London. Naeem, thank you very much for being with us today. Inflationary pressures in the UK, they're spreading well beyond food and energy at this point, and they're really now affecting sectors of the UK economy, such as airline tickets, recreation, culture. What's your view on all this?
Thanks for having me, as always. Look, the situation is as dire as it can be, and there is just no end to bad news when it comes to the UK's economy. As I've mentioned a few times before on your show, some of these injuries are self-inflicted, i.e. the massive involvement with the Russia and Ukraine conflict, and secondly, Brexit on the other side. Now, we are in the UK, of course, feeling the impact of these two big factors, not to mention what COVID has done to the whole country. But more importantly, the lack of confidence business entrepreneurs have, traders have, investors have, in the UK's lawmakers and their ability to control situation. But among all this doom and gloom situation, this is what I want most of the investors to focus on, especially the mortgage owners who are living in the UK. Like, tomorrow is a very important day. As we all know, the Bank of England is going to increase the interest rate by 25 basis points. However, now Andrew Bailey, the governor of the United Kingdom, doesn't have the same liberty to use the same sort of excuses. So I think going into the meeting tomorrow, we may not actually hear that much of a hawkish stance from him. And I think now is the time, really, the policymakers will think hard, look at Europe, which they left, thinking that, Brexit is good, and then bring some of the products, financial products, in terms of a mortgage markets, like 30-year mortgage, 20-year mortgage, which we never had in the UK, to calm down the market. Otherwise, it is a ticking time bomb in terms of the real estate market. And then once the real estate market goes down, so goes down the everything else, i.e. the stock market and the confidence.
Right, lack of confidence, as you say, and you did talk about Europe, because the UK seems to be lagging quite a lot of other comparable economies where inflationary pressures have been abating. Europe is doing better. Why?
Well, look, Europe, obviously the interest rates were very different to begin with. And that's a very huge and a big economy overall, right? So that's a continent in itself. With the UK leaving Europe, there has been a lot of food inflation, which is the direct result of Brexit, right? In addition to that, the UK's of course, both sides have a very strong connection with the conflict between Russia and Europe. But overall, I think policymakers in Europe have been able to control the chaos more importantly. And as I mentioned right at the top of this segment, that they already have products, mortgage products, which are geared towards 20 years, 30 years, 50 years. In the UK, we don't have them. They look at the mortgage prices for the interest rate for 2 years, 5 years, are already out of control, and over 2 million mortgages are due for renewal this year, and that is a massive concern for us.
We'll see what happens tomorrow with the Bank of England. Naeem Aslam, thank you very much for your analysis.
Thank you for having me.
And now let's go to other top stories from around the world. Singapore's Grab Holdings is laying off more than 1,000 jobs in an effort to manage cost and streamline the company. The layoffs are the highest since 2020, when the ride-hailing app cut up to 360 jobs. The CEO says they're not a shortcut to profitability, but will enable the company to adapt to the business environment and the emergence of AI. Chinese electric vehicle maker NIO has raised over $738 million in capital from a fund owned by the Abu Dhabi government. The deal was priced at $8.72 a share, giving the fund, CYVN Holdings, a 7% stake in NIO. The car maker earlier this month had said that slowing car deliveries was affecting its cash flow. And private equity firm KKR has agreed to buy around $44 billion worth of payments company PayPal's Buy Now, Pay Later loans in Europe. The popular Buy Now, Pay Later sector saw a downturn in the last year as high inflation and rising interest rates weakened the purchasing power of consumers. PayPal's shares were up 1.7% on the news of the deal, which is expected to generate around $1.8 billion in gross proceeds.